and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that focuses on the biggest buzz on the D Street. Viewers, we're starting this week on a razor's edge truly, as a fresh wave of global trade volatility has crashed onto our shores. Over the weekend, we've seen President Donald Trump hit the escalate button, bypassing the Supreme Court setback to now slap an immediate 15% global tariff on all imports. It's a move that has sent shockwaves across through the global supply chains and also has left the Indian IT sector looking over its shoulder as well. And if the global headwinds were not enough, we are also tracking the domestic storm at IDFC First Bank today, where a 590 crore rupees fraud at its Chandigarh branch has had local markets asking how did it slip through the cracks as well. The stock is down by 20%. Now we are also looking at the IT stocks as a whole, because Jefferies is now turning cold on Indian IT giants with a fresh round of downgrades. We are also going to be looking at some buzzing action that's kick-starting as far as the primary markets are concerned. Clean Max IPO is testing waters today, but the grey market is not exactly rolling out as one should have expected. So these are the top big stories that we'll be covering in today's trading session in our What's Hot edition as well. First up, let me quickly look at the markets. 25,732, of course, reflecting on Donald Trump's announcement of the 15% tariff, expectations of the 18% to come down to 15%, keeping it afloat as of now. Export-oriented sectors are back into focus. PSU banks are the ones that are leading from the front within the sectors. Autos are driving up, some momentum that you can see even on the broader markets today, but the IT stocks are clearly down in action at this point in time. Let me welcome our guest on board, Mr. Arun Kejriwal, a market expert and veteran, is now joining in on this program. Warm welcome to you, sir, and thank you so much for taking the time out. Well, first up, I want to understand on the broad markets. How are you reading the current undercurrents right now? And what is it as a strategy that you're adopting in this every week, a lot of news flow related impact that we are seeing on the markets?
Good morning, Sakshi, to you and to your viewers. I want to make a small correction. Every week is not what we find change. Every day is where we find changes. Let's take even Friday, for example. The Supreme Court order and in instant reaction was a 10% duty that he had imposed, tariff that he has imposed. And Saturday, he raised it to 15. The one thing is really keeping me worried is with the focus now shifting on what Trump will do, knowing the impulsive kind of reactions that we have seen him to take over the last 14 months, I would not be surprised if he tries and enters the lion's den and does something in the Iran standoff currently. That could be chaos, not only for the US, but for the entire world. Because we need to understand that Iran has the backing, tacit, open, call it by whatever name, of China and Russia. And three countries on one side against the US. We could be, I don't even want to talk about it, but these are very ominous signs. So that's being a pessimist, if you could say. On the positive side, the biggest benefit that we have is 18 is now 15, until and unless Trump makes new changes even to this 15 that he has announced.
Absolutely.
What does it mean for the market? What does it mean for the market, Sakshi? A little less uncertainty on the trade front, but lot of concern on the geopolitical situation, because it's not that we are home and dry.
Absolutely. Viewers, just to give you the entire context as to what Mr. Kejriwal has just pointed out, is that, of course, there was a brief phase of relief following the US Supreme Court's verdict on Trump's earlier tariffs, where they struck it down as illegal. The uncertainty quickly returned to the table as over the weekend, like Mr. Kejriwal pointed out, the 10% global tariffs were in place from the US government, and that has been raised to 15%. Now, markets are juggling on multiple concerns: changing US trade policy, geopolitical risks, as Mr. Kejriwal has pointed out, and uncertainty around the US-India trade deal and where it stands as of now. The US Supreme Court had struck down key parts of Trump's earlier tariff policy, which were used to negotiate trade deals with other countries as well. Although the verdict initially eased the concerns of a prolonged trade war, but US President soon announcing this revised tariff of 15% for 150 days compared to the earlier 10% has again brought back, a lot of confusion and recalculations that a lot of us will have to do. Now, at the same time, like Mr. Kejriwal pointed out, the tensions between US and Iran have also increased, and this remains a key factor in focus. There are many reports that are also talking about a possible deadline for a nuclear deal and growing military presence in the region that have also somehow pushed the Brent crude prices to their highest level since June of 2025. Now, the big question is, will Donald Trump's new 15% tariff boost countries like India, China, Brazil? There are many reports that are indicating that at least we have an even playing field, at least for these countries at this point in time. Or is there an overhang of this 15% also getting changed going forward? So those are the key factors that we have to look at. Now, Mr. Kejriwal, looking at this, what would you do with the export-oriented sectors?
So I have a very different sort of a take than everybody else typically would come up with. The situation today is dicey. Business people or a company doesn't work on a day-to-day basis. They have to take the plunge. They have to sign their export orders. They can't keep on Trump making a decision today and a decision tomorrow. So there will have to be give and take, where they will take a partial risk on the tariff and decide to go ahead and execute orders. This will be done by the exporter as well as the importer, where they will decide that, okay, enough is enough. I can't keep my markets dry. I can't keep my customers away from the product that they have been getting. So somewhere or the other, a line would have to be drawn. Come what may, we'll face it. So I believe, if you want to believe that a company is doing well, the situation has improved from what it was in the previous week after the tariffs have been struck down. There is also a possibility that this 10 and 15, revised to 15, could also be struck down by the Supreme Court, because the section which has decided to levy it does not apply to the United States, because they are not in those conditions which give this power to the president. And the Supreme Court, having given a judgment in one set of orders, would be inclined to also rule on this, and this time not take the kind of delayed time that they took.
Let me also talk about the tensions you pointed out, sir. For a country like India, which heavily depends on imported crude, a sustained surge in the oil prices can continue to impact our inflation, currency stability, and corporate margins as well. How would you look at that at this point in time with the brewing, concerns between US and Iran now?
It's certainly a cause for concern, and let's understand, even if we decide to sort of boycott the demand from the US of not buying Russian crude, the way for Russian crude to reach India is through this tension area. So you'll find freight rates going up, you'll find all sorts of crises coming. So the crude is a matter of concern no matter which way you look at it. And even if you think in terms of importing from Venezuela, which may not be the best crude for us to buy, or the US, you need to move it somewhere through this infested, affected area. The sea route brings you from the Middle East. There is no other way. So I believe it's a tough situation. Of course, One doesn't need to be an over pessimistic at this point of time, but it could keep geopolitical tensions on a boil.
And what about the other commodities, the gold and silver prices that are again inching higher amidst these fresh geopolitical concerns? We've seen $5,100 an ounce for gold and silver prices also soaring at this point in time. What are you advising investors? Because there was a fear of a bubble getting created. Both these gold and silver prices, they crashed sharply from their all-time high levels that they recently had hit, but are now, hovering around 1.6 lakh rupees per 10 grams for gold, and for silver around 2.7 lakhs a kilo. How would you look at these fresh prices?
So, Sakshi, you asked a very interesting question, and you also made a very interesting point. You spoke of the bubble. The bubble did happen and the bubble did burst. We had a 30-35% price fall in 48 hours. That took out the froth that had happened, accumulated, or was there on the pricing part, with every Tom, Dick, Harry, retail investor, your chai wala, pan wala also entering and buying jewelry. A lot of this thing coincided with our budget and trading which happened on a Sunday, which upset a lot of systems. You don't have the banks open, margin calls could not be executed, call it by whatever name you like. COMEX introduced new margins that squeezed people out, the bulls. The same thing, similar thing happened in India. So the bubble is now out of the price for sure. The inching up of prices towards the previous levels is happening on a gradual note. Geopolitical tensions are adding to the price rally, and this time around, the price is more measured and therefore sustainable. To this rise, you have one single underlying fact which cannot be ignored: the purchase of gold by central banks globally. It's not 1, 2, 3 banks which are buying, but across the board, central banks are increasing their quantum of gold holding. And this is physical gold. This is not exchange traded gold. So
Right.
all of this makes you believe that the price rise is sustainable and it is on an upward trajectory.
Absolutely. Viewers, we will also be focusing in depth on the IT stocks, the fresh brokerage houses reports and the concerns that have been shared by Jefferies. We will also focus on IDFC First Bank currently navigating the crisis following a 590 odd crore rupees fraud, and how should you be reading it. But there's a lot of opportunities this entire week that you can also scout for in the primary markets. And I also have my colleague Pawan Nahar joining in to share with us what do you expect today? So Clean Max Enviro Energy Solutions, India's leading renewable energy provider, is hitting the primary markets with about a 3,100 crore rupees IPO. More details with Pawan. Pawan, give us an understanding. How are you looking at this opportunity? What should investors be expecting here?
100 crore IPO, which includes a fresh share sale of 1200 crores and an offer for sale by promoters and existing shareholders of 1900 crores. The price band for this IPO is 1000 to 1053 with a lot size of 14 equity shares. Very interesting thing is about this IPO is that the IPO is appears to be very good, but the current market situations are not supporting the renewables and the solar stock themes. So it's a hybrid model which gives the solar energy as well as the wind energy to the CNI segment, that is the commercial and industrial segments. So what are the key positives for this company? They have a very strong clientele, including big names with Google CEO Sundar Pichai also mentioned them in this AI summit that happened last week. And they have a very long-term contracts with their clients. Average period for their clientele is 23 years. So and they have a consistent cash flows and improving margins. But what goes against this company, that the valuations are very high, they are aggressive, and they have a high level of debt, and the company turned profitable recently. So these are the negatives for the company. Majority of the brokerage firms, they have suggested to subscribe this to this IPO, but for from a long term perspective only.
Okay, got that. Thanks a lot, Pavan, for getting us all of those details. Long-term subscribe only. That's the kind of brokerage houses uptake there is on Clean, Max IPO at this point in time. But let me go across to Mr. Kejriwal and take his view as well on this IPO. Of course, as some of the key risks highlighted by Pavan here have been, as far as some valuations are concerned, much steeper than peers like maybe Adani Green or an NTPC Green for that matter. Debt is continuing to be a concern. A significant portion of the fresh issue is earmarked to pay down about 7,900 crore rupees in total borrowing. How would you look at the opportunity? Of course, it's a sunrise sector. Renewable energy, we all know, is going to be playing a major part over the next 5-10 years, and the growth and the capacity expansions will be massive. Opportunities could be large. But what are the concerns today?
So, Sakshi, the biggest concern today is what will happen tomorrow morning. And tomorrow morning means what Donald Trump will say tonight in the US and what will happen on a geopolitical global scenario. The IPO typically is open for 3 days and it lists 3 days thereafter, which includes a Saturday and Sunday. So from day one to listing day, you have got 8 days of uncertainty that creep in with nothing much on offer in terms of grey market, the size of issue being large, the possibility that you would get allotment being very, very bright. I would advise investors to look at the secondary market today in the interim in these 8 days and take a call on this share when it lists. I'm sure you're not going to have missed anything significant in applying for the share and getting to buy that share when it lists. So in fact, you can, hold on to your horses and look at investing in this share when it lists, whenever it does so.
Okay, got that. So Clean Max, better to avoid to rush in early to participate in the IPO rather than look for in the secondary market. A lot of global uncertainties could impact the way scenarios really emerge. You would not really miss out on a big opportunity if you do not apply for this one at this point in time. As Pavan also pointed out, most of the brokerage houses have only subscribed for long-term rating. So which means that only for listing gains, if you've been looking at this IPO, this may not be the brightest opportunity out there. Okay, let's focus on the listed space, especially the one where there is pain. Over 1% downtake on the IT sector today. And there is a big downgrade on tech stocks by Jefferies this morning. We've seen 6 tech companies being downgraded by Jefferies: Infosys, TCS, HCL Tech, Mphasis, LTI Mindtree, Hexaware. They've all been downgraded. Now, the report says that AI could structurally alter the business models and compress the valuations. AI could structurally change the business mix of these tech companies towards consulting and implementation. All this while shrinking the traditional managed services as well. And such a transition may increase the revenue cyclicality and demand significant changes in talent and operating models as well. What it also says is that risk reward remains unfavorable. Current stock prices imply revenue compounded annual growth rate of 6 to 14% for large IT firms and 9 to 17% for mid-sized players from FY26 to FY36. And these assumptions are now below historical growth rates for several companies, and yet the brokerage sees scope for further valuation compression from these levels as well. So let's try and understand what's happening on the IT space. We do know over the last 2 decades, 3 decades that you have been tracking the markets very closely. There was a time that a large portion of retail investors' portion should have been tech focused, looking at the agility that this space brought in. Of course, the connectivity that the world was betting big on. But the tech disruptions are fairly large and are being talked about at global stage. We've just had the India AI Impact Summit as well. We saw what happened with the last 2 weeks with Anthropic news coverage as well. And now downgrades coming in by brokerage houses. What is your advice to retail investors on the IT space?
So, Sakshi, there are two important things that one needs to look at IT. As the price per share moves up, and moves up, I'm not saying 500 becoming 600, but when it gets into 4 digits and then multiple of 4 digits, so say a TCS, 2500, 3500, 4000 odd, retail participation in such high price shares of valuation tends to reduce. There is risk. They become risk averse holding a share which is that price, and I'm talking of the numerical value, not fundamental value. So they tend to get out of such shares and buy shares which are lower priced in terms of rupees per share. That is the first part. Second part, these companies have been giving buybacks as a way of rewarding shareholders. Each buyback eliminates another set of retail investors. So if you were to take retail holding below 2 lakhs of rupees, which is a definition that is followed in the stock exchanges or in company law, you will find this number, this percentage on the decline. Coming to your question, what should be my advice to retail investors? Well, downgrades have happened. We all know that AI is something that is coming. We'll have to, let's say, that a Infosys or a TCS or a HCL doesn't know anything about AI is not correct. I'm sure possibly by the next year when we talk about these companies, they will all have got contracts with AI. They would be doing some work on AI, and they would have managed to plug the gaps which they are now being threatened with. So no need to panic. It's not doomsday. There could be some short-term impact, but businesses which are being run on software, on services, are not going to collapse. For example, let us take Infosys and one of its top products, Finacle. So many banks in India and abroad run on this product. I don't think AI will ever replace this product, and you will have banks working on AI itself. So I don't think it's end of the world. Don't panic. Hold on to your stocks. If you were thinking of adding on dips, postpone that particular thought.
Okay, I hope this has given enough clarity all our viewers who've been looking at the IT space with a lot of caution at this point in time. What exactly is the way to really look at what's happening and what should your approach be? All right, let's also focus on the big news that came in with respect to IDFC First Bank today. And this is when it comes to the navigation of the internal crisis at the bank. 590 odd crore rupees fraud at its Chandigarh branch. The issue came to light in mid-February after Haryana government attempted to move funds only to find that their record balances did not match with the bank's actual books. And this incident is particularly sensitive as it involves the public state funds, leading to immediate punitive action from Haryana government and raising questions about the internal oversight at the branch level through various audits as well. Now, of course, the key questions are what was the modus operandi here? Unauthorized activities by specific employees involving some fund diversions. How was the fraud uncovered? The key trigger was the Haryana government department requesting to close its accounts and to transfer its funds to another bank. And the discrepancy happened during the transfer. The bank found a mismatch between the government's reported balance and the actual balance held as well. And therefore, some escalation took place. Further checks revealed that similar matches in some other government-linked accounts were also found. And therefore, as an immediate action, the bank has now looked, of course, course, penalized 4 bank officials. They've been suspended. Investigation is taking on right now. External forensic auditor has been taken on board. There are some, of course, seen as proceedings that are taking place at this point in time. Some recall requests were sent to beneficiary banks to freeze the suspicious accounts as well. Now, of course, as an impact or a significance of this is that, what is the customer safety for all those people who have their accounts with IDFC First Bank? Now, the bank claims that the issue is strictly isolated and does not affect general retail or even other corporate customers at this point in time. But of course, the damage has been done. We've seen IDFC First Bank crack and trade today. About 20% of a crash has come in, and this is probably one of the largest falls that we've seen in a long time for IDFC First Bank as well. And of course, the stock is paying the price. How would you look at the incident, Mr. Kejriwal, and what would you say? I think since March of 2020, we've not seen such a fall on the stock.
So what has happened is shocking, and one is reminded of what we kept on hearing about IndusInd Bank, their issues with corporate governance, their issues with forex trading, the way they were accounting, and more importantly, the lesson to be learned that they kept on giving news, they kept on giving information, but the market refused to believe them, and the share was under pressure for a good 8 to 12 months. I believe the impact that you have seen today in price is the impact from the stock market perspective. You will now hear customers closing their accounts, withdrawing their money. There could be some systems and procedures in some corporate accounts that where such an incident takes place, the bank, the account holder has to take some precautionary measures and stop using IDFC Bank as the only bank or the larger bank. So you will hear in the next 7 days account shifting out of IDFC Bank because now the systems and integrity of the bank would be under question. I believe it's time for IDFC to step out and get back customer confidence before the issue starts steamrolling.
What would you advise to retail investors? The stock has just recovered partly from the day's lowest point and from the 20% lower circuit. It's now down by around 16%. So some people are still probably looking at an opportunity to dip in. How would you really advise retail investors? Should they enter or completely stay away?
So if your question is, you are not an investor with IDFC and you want to try to make some punt, it could be done. 20% at one point, now 16% down. If you are doing an intraday trade, do it with a strict stop loss. You could make 4, 5, 6% sometime during the day. But if you are looking at it from an investment perspective, please avoid currently, because one doesn't know what would be further implications that come out, whether the funds which were moved out of the bank to other accounts, what is the status of those accounts, and whether once the detailed investigation into those names comes, does it lead to further ramifications or more people being involved? Is it a wider network, etc.? It's thin ice. Don't let on to sink in it.
Right. All right. I hope that this has also given you some clarity there. Of course, we will be continuing to cover this through the course of the day also and see some further clarifications if they come from the management, as well as far as IDFC First is concerned. But you've heard it from Mr. Kejriwal as to what should be your approach at this point. Thank you, Mr. Kejriwal, for being with us on the show today. We've touched base upon a lot of key topics that are of concern and importance for all our viewers to track today, and of course value all the insights that you've shared with all our viewers. Thank you so much for being with us.
Thank you, Sakshi.
All right, viewers, 25,700 is where we are at as far as the Nifty is concerned, 132 points higher. So we are holding up with gains across some sectors, PSU banks, auto, for instance. Small caps are up and about. You're also seeing FMCG, private banks, pharma up. But IT and now real estate, media stocks have also slipped. Mid caps are also down in trade at this point in time. Some of the key stocks that are up and about at this moment from the Nifty are Adani Ports, Axis Bank, HDFC Life, SBI Life, Tata Consultancy Services is up now. In fact, this is Tata Consumer Products, not Tata Consultancy. All the IT stocks are in fact down. So these are the stocks that are up in about 2.5%. Some oil and gas related stocks are also buzzing about 1% higher for the OMCs, IOC, BPCL, HPCL at this point. So keep an eye out on that. IDFC Bank continues to reel under some pressure, and we'll continue to get you all the big movers and the market makers through the course of the session today. Stay tuned with us.
Hello everyone. The world, it seems, has converged in New Delhi for the India AI Impact Summit.